The market is currently closed for the weekend. The final closing price for ONDS Inc., trading under the ticker symbol ONDS on the Nasdaq, was exactly $11.21 per share, recorded at the closing bell on Friday, May 15, 2026 at 4 p.m. Eastern Time. This capped off a massive trading session where the stock surged significantly, jumping more than 22% on Friday alone after a week of intense volatility. If you were watching the price action on popular investing sites or tracking it on your smartphone, this spectacular rise completely upended what short sellers and cautious analysts expected just days ago. While the broader consensus assumed that ONDS Inc. was just another speculative, capital-burning micro-cap drone stock struggling to find its footing, the reality that hit the tape this week proved to be something entirely different. Retail traders checking their individual brokerage accounts or skimming through updates on the Robinhood app witnessed a massive disconnect between expectations and fundamental execution. The market expected a slow, bleeding quarter with high cash burn. The reality delivered was an absolute explosion in top-line revenue that shattered consensus estimates by over 25%. This financial divergence triggered a massive short squeeze and institutional accumulation phase that forced the stock up past its 50-day and 15-day moving averages in a single afternoon. When a small-cap defense and communications hardware provider posts a tenfold increase in quarterly revenue, the old thesis goes straight into the trash, forcing a complete recalibration of the asset's true value. Understanding this volatility requires dissecting the massive institutional activity and trading volumes that flooded the tape over the last 48 hours. On Friday, trading volumes surged past 140 million shares, more than double the company's recent trailing daily average. This indicates that this wasn't just retail speculation on the Robinhood stock trading platform. It was heavy institutional reallocation. When massive volume hits a stock at a specific technical inflection point, it usually means big funds are building positions. This sudden influx of capital caused significant intraday swings, with the stock opening around $9.99, dipping briefly to a low of $9.60, and then skyrocketing to an intraday high of $11.73 before settling at its final price of $11.21. For investors utilizing Interactive Brokers trading networks, the order flow showed massive block trades executing throughout the afternoon, which points directly to institutional accumulation following their blowout first-quarter earnings report. This massive price surge is completely tied to the earnings data released on May 14, 2026, which fundamentally shifted how the company is valued on platforms like SoFi Investing or via Advanced Interactive Brokers platform analytics. ONDS reported a stunning first-quarter revenue of $50.12 million. To put that into perspective, that is a jaw-dropping 1,079% increase compared to the first quarter of the previous year. Wall Street was only expecting around $40.1 million. Even more shocking to the short sellers was the bottom-line profitability. The company posted a diluted earnings per share of 56 cents, completely obliterating the analyst consensus estimate, which projected a net loss of 6 cents per share. Delivering actual net income when the entire market expects a loss is the ultimate catalyst for a violent upward re-rating. Additionally, the corporate backlog has now swollen to over $450 million due to recent strategic acquisitions, prompting management to officially raise their full-year revenue guidance to at least $390 million. However, a sophisticated investor using Fidelity Wealth Management Services or building a long-term self-investing strategy knows that you have to look at the cross-currents beneath the surface. While the headline numbers look flawless, the cost of sales also expanded dramatically to $25.5 million, representing an 822% increase year over year. Operating losses, while improving significantly, still sat at negative $42.7 million. The massive net income beat actually included non-operating adjustments and asset revaluations, which means the underlying cash flow from operations is still negative $51.3 million. This divergence is exactly why the stock has experienced massive daily swings. Experienced traders executing strategies through a Fidelity trading platform or tracking asset flows via sophisticated tools recognize that high-growth defense tech firms often experience messy balance sheet transitions before their cash flow matches their accounting profitability. Before deciding where this asset goes next, let us look at what this business actually does and how its structural operations generate revenue. ONDS Inc. operates across two highly specialized business segments, ONDS Networks and ONDS Autonomous Systems. The network division focuses on their proprietary FullMax software-defined radio platform, which provides secure, wide-area broadband networks for mission-critical industrial applications like rail systems, electric utilities, public safety, and oil and gas infrastructure. The Autonomous Systems division, which operates through subsidiaries like Aerobotics and Centrix, is where the hypergrowth is happening. This segment builds fully automated drone systems and counter-unmanned aircraft systems, or anti-drone defense technology. Their Optimus system is a fully automated drone-in-a-box solution used for continuous industrial monitoring and security, while their Iron Drone Raider and Centrix platforms detect, track, and intercept hostile unauthorized drones using advanced cyber and radio frequency technology.
Geographically, the operational footprint of ONDS stretches across the United States, Israel, Germany, the United Arab Emirates, and India, with Israel historically serving as a massive revenue driver for their autonomous defense tech. This international presence positions them directly inside the rapidly expanding global defense and automated infrastructure markets. When you look at popular online investing platforms, tech stocks with heavy defense contracts are attracting massive attention due to rising geopolitical tensions worldwide. The core asset of ONDS is their ability to secure large-scale government and industrial backlogs, which are now translating into recognized revenue. Yet historical performance shows that this has been a long, painful road for early investors. The stock is traded as low as 76 cents over the past 52 weeks, meaning that despite the recent rally to $11.21, it is still recovering from a long history of dilutive capital raises and operational delays that kept the stock grounded for years. This historical context brings us right back to the tension between market expectations and current operational realities. The old narrative around ONDS was that it was a highly speculative pre-revenue hardware company that would constantly dilute shareholders to keep the lights on. The current reality shows a company with over $1 billion in cash and cash equivalents on its balance sheet, massive top-line execution, and a clear path towards sustainable operational profitability by early next year. This dramatic shift is causing significant rebalancing across various asset management portfolios, whether investors are holding individual stocks directly or exposed via sector-specific funds like Fidelity ETFs, specialized Fidelity mutual funds, or automated models like Schwab Intelligent Portfolios. When a company transforms from a speculative microcap into a mid-cap defense tech player with a $500 million backlog, institutional managers take notice. Let's pause here for a moment because I want to hear from you. Comment below how many shares of ONDS Inc. you currently hold, or if you are looking to buy into this recent momentum. Let me know your thoughts on their defense tech backlog in the comments. Looking forward, the future outlook for ONDS Inc. depends entirely on how well they execute on this massive $450 million backlog and whether their acquisitions can integrate cleanly without further destroying operational cash flow. Management has explicitly stated that they expect their core drone subsidiary Aerobotics to reach standalone EBITDA profitability by the first quarter of 2027. If they hit that target, the stock could easily find support for a sustained long-term run towards its previous 52-week high of $15.28. However, if the high cost of sales continues to outpace cash receipts, or if geopolitical defense spending slows down, the reality will quickly fall short of these newly inflated market expectations, leading to a swift breakdown back towards the single digits. For those using a Fidelity mobile app or monitoring their portfolios on the SoFi trading platform, managing this risk through proper position sizing is absolutely critical. Macroeconomic pressures will also play a massive role in how this stock performs over the next few quarters. High-growth technology and hardware stocks are incredibly sensitive to corporate capital expenditure cycles and government defense budgeting. While the autonomous drone and counter-drone defense sectors are seeing record funding right now, any shift in regulatory policy or defense procurement timelines could delay revenue recognition from that massive backlog. Investors utilizing automated robo-advisors such as a SoFi robo-advisor or an intelligent portfolio setup often see these types of volatile, high-beta stocks excluded from conservative models due to their massive daily swings. If you prefer self-investing through an individual brokerage account, you must accept that ONDS is currently a battleground stock where the bulls and bears are fighting over the validity of its long-term profit margins. Furthermore, monitoring insider activity provides vital clues about where management thinks the stock is headed. Over the last 6 months, insider trading records show significant selling from top executives, including the CEO and CFO, with 0 open market purchases. While insider selling can often be attributed to pre-planned prohibitive subtitles or tax obligations, a massive volume of insider sales right before an earnings pop always raises eyebrows. Serious investors tracking order flows on specialized interactive brokers' fee schedules or deep dive research platforms notice these trends and weigh them against the spectacular earnings print. If insiders continue to liquidate shares while the stock pumps on retail enthusiasm across mainstream trading platforms, it creates an underlying layer of skepticism that could cap the stock's upside momentum. When comparing ONDS to other highly discussed growth assets on the market like Tesla stock, Apple stock, or Nvidia stock, the risk-reward profile is completely different. Those mega-cap giants are institutional staples found in almost every major index, whereas a specialized small to mid-cap stock like ONDS requires a completely different analytical framework. You cannot look at ONDS through the lens of a stable blue chip. You have to evaluate it as a high-stakes corporate turnaround story that is successfully validating its business model in real time. Whether you execute trades via the Robinhood cash management system, buy fractional shares, or utilize institutional tools through interactive broker stock trading desks, the underlying asset demands constant monitoring of its quarterly cash flow statements rather than just focusing on headline revenue figures. To summarize the central insights of this deep dive, the story of ONDS Inc. is a classic example of a massive disconnect between past market expectations and current fundamental reality. The market expected a struggling, cash-strapped drone company. Reality delivered a highly profitable quarter with an astronomical 1,079% revenue increase and an updated full-year outlook that signals long-term operational sustainability. This fundamental surprise is what fueled the massive 22% explosion to $11.21 per share at Friday's close, supported by historic trading volumes that suggest institutional accumulation. While structural risks regarding operational cash burn and insider selling remain highly relevant, the sheer size of their $450 million defense and industrial backlog cannot be ignored. For retail investors and institutions alike, ONDS has officially transitioned from a speculative microcap afterthought into a serious high-growth technology asset that demands a permanent spot on your watch list. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.